few options for your intro. Choose the one that best fits your style. Option 1, friendly and direct. Hey everyone, and welcome back to Forex Scope. Today, we're diving deep into the AUDJPY, giving you a sharp, short-term perspective with our 15-minute and 1-minute timeframes. If you're looking for actionable insights to navigate the Forex markets, you've come to the right place. Don't forget to hit that subscribe button and the notification bell so you don't miss out on our daily analyses. Let's get started. Option 2, engaging and benefit-oriented. What's up, Forex traders, and welcome to another exciting analysis from Forex Scope. This time, we're zeroing in on the AUDJPY, breaking down its movements on the crucial 15-minute and 1-minute charts. We'll be sharing our outlook and potential trading signals to help you make informed decisions. If you want to stay ahead of the curve in the Forex world, make sure you're subscribed. Smash that like button if you're ready for this analysis. Option 3, concise and professional. Greetings and welcome to Forex Scope, your go-to channel for insightful Forex analysis. Today, we're focusing on the AUDJPY, examining its short-term dynamics across the 15-minute and 1-minute timeframes. Our goal is to provide you with clear signals and future price trends. For consistent updates and expert market insights, please consider subscribing to our channel. Let's jump into the AUDJPY analysis. This resistance zone is identified by a period of consolidation and significant price action between 3 hours and 45 minutes and 5 hours and 15 minutes on November 12, 2025. The price range between 101.757 and 100.626 shows multiple attempts to break higher, with a series of candles forming significant highs and lows within this band. Notably, the candles around 4 hours and 15 minutes to 4 hours and 45 minutes show substantial upward wicks and struggle to sustain higher prices, indicating strong selling pressure. This resistance area also features a period where the price moves sideways, forming a clear horizontal barrier. The high volume during this consolidation further emphasizes the significance of this price level as a point where supply met demand and temporarily halted upward momentum. The upper bound of this zone is marked by the high of 101.757 at 4 hours and 15 minutes, and the lower bound is defined by the low of 100.626 at 3 hours and 30 minutes, encompassing the entire struggle to push past this level. The presence of multiple touchbacks and the inability to decisively break above this range highlight its strength as a resistance. This support zone is formed by a notable period of indecision and consolidation between 10 hours and 11 hours and 45 minutes on November 12, 2025. Within this timeframe, the price action between 101.186 and 101.11 shows a clear battle between buyers and sellers, with multiple smaller bodied candles and overlapping price ranges. The price repeatedly tested the lower bound of this zone, indicating that a significant number of buyers were stepping in to prevent further declines. The presence of lower wicks on several candles within this range further confirms buying interest at these levels. The high of 101.186 at 10 hours and the low of 101.11 at 10 hours define the boundaries of this area where the price struggled to move decisively in either direction. This sideways movement, often referred to as accumulation or distribution, suggests that a substantial number of participants were actively trading within this price band, creating a strong level of support. The consistent failure to break below this established floor indicates its resilience and importance as a support level. The support zone is identified by a series of candlestick patterns indicating buying pressure and consolidation in the price range. Specifically, from timestamp 176.306.8620 to 176.306.8860, we observe candles with lows that repeatedly test or hover around the 100.903 to 100.915 area. The price action shows several instances where the price fails to break decisively lower, suggesting that this level acts as a floor. For example, the candle at November 13, 2025, 2117, timestamp 176.306.8620, has a low of 100.904 and its subsequent candles in this timeframe also show this area as a significant price level. The existence of multiple touches and the inability of sellers to push the price substantially lower in this period indicate accumulation or at least a pause in the downtrend, reinforcing this zone as a strong support. The Bollinger Band indicators during this period, with the lower band generally above 100.87, also support the idea of buying interest emerging around these price levels. The relatively large number of candles interacting with this zone, coupled with the inability to break lower decisively, highlights its importance as a price level where buyers have shown consistent interest. The price action exhibits a tendency to bounce back from these lows, as seen with the close price at 100.903 at timestamp 176.306.8860 after a dip. This resistance zone is characterized by strong selling pressure and a clear ceiling that the price struggles to break through. Observing the price action from timestamp 176-307-1680 to 176-307-1740, we see candles that reach highs around 100.961 and 100.961, but struggle to sustain prices above this level. The significant high of 100.961 at November 13, 2025, 2208, timestamp 176-307-1680, and the subsequent inability for the price to move significantly higher in the following candles demonstrate a clear rejection of higher prices. The low price reached during this period around 100.943 also indicates that when the price did pull back, it found some initial support, but the resistance at the upper end remained formidable. The Bollinger Bands, with the upper band generally below or around 100.97, also suggest that prices exceeding 100.95 are considered overextended in this context. The presence of multiple attempts to break above this level, all resulting in price reversals or consolidations below it, signifies a strong supply zone where sellers are actively defending their positions, creating a significant resistance. The fact that the price failed to establish a new higher high after reaching this area points to the strength of the selling pressure present in this range, making it a key resistance level to watch. The candle at November 13, 2025, 2209, timestamp 176-307-1740, closed at 100.959 after testing higher prices, further reinforcing this area as a point of significant selling activity. The Aussie dollar against the yen is currently trading at 100.94, having just completed a 15-minute candle with a close of 100.94. The recent price action, particularly on the 1-minute chart, shows a period of slight downward pressure followed by attempts to regain ground. The presence of support around 100.903 to 100.915 suggests a floor, while the resistance around 100.951 to 100.964 indicates a ceiling. Given the current consolidation and the proximity to these levels, expect a period of choppiness. Initially, a slight dip to 100.925 is possible as selling pressure might reassert itself briefly. However, the established support should prevent a significant drop, leading to a potential bounce back towards 100.945. The market will then likely test the upper bounds, potentially reaching 100.95, before facing renewed resistance. The subsequent price action might involve a pullback to 100.942, reflecting the ongoing tug-of-war between buyers and sellers within the identified support and resistance zones. This zigzag movement will continue as the market navigates these key levels, with traders looking for a decisive breakout or breakdown. The overall sentiment suggests a ranging market in the immediate short term, with potential for a breakout if significant volume or news events emerge. The Bollinger Bands, currently exhibiting a moderate width, support this view of consolidation.